What is going on, my friends? Ryan Williams here, back with another one. And excuse my French, but holy cow, the stocks we are going to be talking about today are, in my opinion, ridiculously cheap. It is unreal. That's right, guys. Today we are going to be talking about two pretty great dividend stocks in the financial sector that appear to be at somewhat of a discount, both of which have PE ratios in the single digits, which for those of you who are newer to dividend investing, that is one metric we use to determine how affordable a stock is priced in relation to its earnings per share. Definitely a good one to know. But at any rate, we are going to kick things off by taking a look into these two stocks to see how they've been performing lately, and we'll also take a look at their financials as well as the dividend stats so we can get a good idea of just what we're working with here. Then later on in this video, I'll be giving you guys a little portfolio update so you can see what's been going on in my neck of the woods this past week. Anyway, before we get rocking and rolling, if you guys are stoked to talk about some dividend stocks at a discount today, go ahead and give this video a big thumbs up. Also, if you enjoy learning more about dividend stocks, then I'd ask you to consider subscribing to my channel. At this point, I'm putting out 2 videos every single week on the topic of dividend stocks, most of which are different analyses on the stocks that I come across, as well as inside looks into my own dividend stock portfolio, both of which are things we are going to be doing today. So if that's at all up your alley, then go ahead and hit that subscribe button for me. Anyway, thank you so much for doing that. And now, without further ado, let's get into it. All right, my friends, to kick things off, the first stock we are going to be talking about today is Citigroup, ticker symbol C. That's easy to remember. But as you guys can see right here, Citigroup just in the last couple of months, really the last few months, has come down in share price quite significantly. It looks like back in like the beginning of October, end of September, it was sitting at about $70 per share, and now we're down under $60 per share as of today. And then just today, guys, it dropped 2.5%, which is a pretty big drop in one day. But at any rate, guys, it is still positive for the year. Just barely, though, it is only up about 2.2% in the last 365 days. And then if we zoom in a little closer, in the last 6 months, it has really dropped significantly, okay? This is where most of the losses have come from. So in the last 6 months, it's dropped 14.5%. And then in the last month, guys, in the last 30 days, it is down almost double digits, 9.85% loss in the last month. That is pretty unreal, and does kind of somewhat indicate it's at a little bit of a discount in the last 30 days. It's at least 10% cheaper than it was this time a month ago. Which I'll tell you what, if In-N-Out Burger sent me an email today and said, hey, our burgers are 10% cheaper than they were this time in November, I would drop everything I'm doing, get in my car, and drive right over there. But we'll dive a little bit deeper into this and see just really how discounted it is, okay? So before we go over to the valuation page, I want to scroll down and take a look at I want to see what the bulls are saying, and I just skipped it. So the Seeking Alpha bulls right here, which are basically just a few people who have written articles on this stock, which, side note, it really doesn't mean too much at the end of the day, but it is always good to see what other people have to say about these companies, both the good things and the bad things. But more often than not, guys, there's only good things to find, not just about Citigroup, but most stocks on Seeking Alpha, I've noticed. Not many bears are here on Seeking Alpha. There's not a lot of negative feedback about these companies. There may be one here and there, but that is not the case with Citigroup. So let's get into what this first bull is saying. And this individual says, Citigroup is too cheap to ignore and with a huge discount to tangible book. The restructure narrative has not been acknowledged yet by the market. All right, that sounds pretty good, especially this too cheap to ignore part, guys. So moving on to the second one right here, the current valuation offers significant upside if the looming strategic overhaul looks to reduce international operations. All right, and moving on to point number 3, Citigroup is the most fundamentally undervalued large U.S. bank, trading at a discount to tangible book value and at a single-digit earnings multiple. That's this single-digit PE ratio right here, guys. 5.77, which we will take more of a look at right now when we jump over to the valuation page. So overall, Seeking Alpha gives Citigroup an A grade, which is awesome. And starting with the PE ratio, it actually gives it an A+. So we just saw that that was 5.77 for the forward PE ratio, which happens to be 46% cheaper than Citigroup's 5-year average PE ratio of 10.7, which we can see right here. This also happens to be almost 50% lower than the sector median PE ratio. So in comparison to its previous self, as well as the other stocks within the sector, Citigroup is looking to be at a relative discount. Just based on this PE ratio right here, guys, we're still going to scroll down. We want to take a look at the price to book right here, which is extremely low. It has a forward price to book here of 0.65, which is very low, guys. Very low. 18% cheaper than this company's 5-year average price to book, and also almost 50% lower like the PE ratio. almost 50% lower price to book than the sector median of 1.23. All right, guys, and with that said, let's now move on and scroll up and jump over to the financials page and go through some of the financial statements here and see what's going on under the hood with Citigroup. So starting with the total revenues, guys, okay, right down here, it looks like total revenues overall is been pretty flat, but we can see in the trailing 12 months, it has really jumped up compared to previous years. So hopefully this is a trend that will continue moving forward. But we can see back since we'll go back to 2017, 65.2 billion, going into 2018, 65.5 billion, going into 2019, 66 billion. So all going up those 3 years. But then we saw a bit of a drop here in 2020 by about $8 billion in revenue, which they'll get a little bit of a pass for 2020. That was a whirlwind year, but they have since made up for it, at least so far in the trailing 12 months. We'll see how they finish off 2021, but so far it's looking pretty promising, I'd say. And then scrolling down before we move on to the balance sheet, I want to take a look at the dividends per share and see what has been going on with that over time. So that is this row right here. And as we can see from this chart, the dividends per share with each year has just really gone up. This is a very steep slope. Like just from 2015 to 2020, it's gone from 16 cents to $2.04, which I don't know how much of a gain that is, but that's definitely over 10 times the amount of dividends per share that it was in 2015. Maybe probably closer to 17 or 18 times. Check my math on that, but it's quite a bit of a gain. And it's really good to see this steep slope here as far as the dividends per share with each year. All right, guys, now scrolling up, let's go over to the balance sheet real quick and take a look at a couple things here. All right, guys, now scrolling down, let's first take a look at the shares outstanding and see what that has been doing the last handful of years. So looking at this chart right here, looks like Citigroup's been buying back shares fairly aggressively. So back in we'll go back to 2016 here, they had 2.8 billion shares outstanding compared to now they have 2.1 billion shares outstanding. So in the last few years, they've bought back like 25% of the shares outstanding or somewhere in there. And it looks like they bought back even more than that because in the last report, which I think would have been like November, maybe October or November when they had their last earnings report, looks like they bought back basically another 100 million or so shares. So it's good to see this number continue going down. And now the next thing I want to look at, guys, is this tangible book value per share. From what I understand, I'm trying to learn a little bit more about analyzing these bank stocks because I know they're a little bit different than some of your regular companies like a Coca-Cola or a Procter & Gamble or something like that. So I'm trying to do a little bit more research into how it all works with these bank stocks. And I know that the book value, the tangible book value, and the tangible book value per share are fairly good indicators as to how the value of these companies is growing over time. So the stock's book value is becoming more valuable as the years go on. And it's very possible too, I mean, if we just take a look at the straight tangible book value, this isn't moving too much. In fact, it's pretty dang flat from 2017 till 2020. However, we are probably seeing the tangible book value per share going up because Citigroup is buying back shares so aggressively. So because there's less shares in circulation, the tangible book value is going to be spread out across fewer shares of the company, which means that the tangible book value per share is going to increase. Hopefully I didn't lose you in that explanation and hopefully it all made sense. But now moving on, guys, I want to take a look at the net debt, which actually here is pretty cool. So as you can see, this company has a negative net debt. For the last 10 years, they've had a negative net debt, which is a really good thing. Essentially what this means, guys, is this company has more liquid assets on its balance sheet than it does total debt. So if it had to, it would be able to pay off all of this total debt right here, and then it would have like almost $425 billion left over, which is pretty insane. I couldn't even fathom that. But I think that's a really good sign, and that speaks to this company's ability to meet all of its debt obligations. I'd say it's in pretty good shape just looking at this right here, guys. And now with that said, guys, we are going to scroll up and take a look at Citigroup's dividends and see what is going on there, because you know we love those dividends. So scrolling down on the dividend scorecard page right here, we can see that Citigroup has a forward dividend yield of 3.34%, which is pretty respectable. It's not a super high dividend yield, but it's really also not a low dividend yield. I'd say this is pretty run-of-the-mill, pretty right in the middle there, and they have a pretty low payout ratio to go along with this, 19.28%. It looks like the dividend here is not putting really too much financial stress on the company, which is great. They have a lot more cash to contribute to the dividend if they wanted to. And then moving on, this says they have a 5-year growth rate of 37.18%, but we're not going to put too much stock in this right now because they do have 0 years of dividend growth. And if we scroll up and take a closer look at this right here, guys, this is the one thing I'm not crazy about with Citigroup. We can see that prior to 2015, there really wasn't much going on with the dividend. It looks like they were paying it pretty consistently, but it was only like 1 cent per quarter, which is nothing, guys. But then in 2015, they bumped that up to 5 cents, and it looks like it was growing pretty well since then. It looks like it probably prior to 2020 had 5 or so years of dividend growth from 2014 to 2015, 2016, all the way up to 2020. And then they did not grow their dividend between 2020 and now. In fact, it looks like since August of 2019, they've been paying 51 cents per share per quarter, which, they've come a long way since 2015. That's 10 times the amount of dividends per quarter. But still, there's not much dividend growth to speak of in the last couple of years. But it's also not like they don't have the cash to do so. Who knows what they'll continue to do? I haven't read too in depth on what the next move is here, but I do think they have the capability to grow the dividend if they wanted to, and hopefully that's something we'll see here in 2022. And with that said, guys, before we move on, I probably should let you know this company is in my watch list right now. Actually, this is a stock I've been considering adding to my portfolio for a while. I'm just not quite sure if I want to add any more companies, but I could use a little more diversification within the financial sector of my portfolio. And as far as I can see, Citigroup seems to be at least my favorite contender so far from what I've analyzed. All right, my friends, the second stock we are going to be talking about today is Allstate, ticker symbol ALL. And if you've been watching my videos for a little bit now, you've definitely heard me talk about this stock. I think I've been mentioning it more recently the last couple of months or so, but this is another stock that's sitting in my watch list and I'm kind of considering pulling the trigger on. But at any rate, let's get into the share price performance. So in the last year, Allstate, it's actually not doing too bad, up 8.8%, still underperforming the S&P, but almost 9% gain. That's not terrible. We'll give it to it. And then in the last 6 months, Allstate is actually down double digits, down 11.21%. And then in the last 30 days, Allstate is actually up just a little bit, up 0.4%. And it looks like it's had a little bit of a run up here, probably within the last few days. Actually, this week, it looks like it's done pretty good. It's gone from $107 per share all the way up to $116 per share at one point, and then it finished the week here just above $114 per share. And now let's scroll down and see what the Seeking Alpha Bulls has to say. And there's not much positive news, not much positive sentiment from Seeking Alpha for Allstate. But the one person here says, Allstate has bullish outlooks from Wall Street analysts and from the options market. The valuation is reasonable and the earnings per share has been consistently beating expectations. That's good to see. So now let's scroll up, guys, and take a look at the valuation page and see just how cheap Allstate is looking. So Seeking Alpha overall gives it just a little bit lower grade than what they were given Citigroup. Overall a B+, but the PE ratio of this company is really not too bad at all. Also in the single digits, 8.65 for the PE ratio, which is almost 20% lower than Allstate's 5-year average PE ratio, and is also just over 20% lower than the sector median PE ratio. And then scrolling down, if we take a look at the price to book here, this actually really isn't too bad. For insurance companies specifically, this may be a little bit high, but in general, just all across the board, a 1.35 price to book is not too bad. A perfect price to book is 1.0, and we've most definitely seen other stocks with considerably higher price to book. So I'm not mad whatsoever about this price to book right here. All right, guys, now with all of that said, let's scroll up and go over to the financials page and take a look at some of the financial statements for Allstate. And then starting with the total revenues right here, this looks to be in pretty good shape. We're seeing some pretty consistent growth as the years go on. More aggressive growth here between 2018 and 2019, and then 2019 and 2020. That's looking pretty good. And actually in the trailing 12 months, I'd say Allstate is doing considerably better as well. We've seen a lot more growth in 2021 in terms of total revenue compared to the previous years so far. We'll see how it finishes out the year, but I think it looks to be in pretty good shape. And then scrolling down, I want to take a look at the dividends per share to see what is going on with that. And this looks very similar to what we saw with Citigroup, just a very nice, consistent slope upward. And, hopefully they keep this going over time, because this is what we want as dividend investors. We want our companies to be growing in their own right so they can pay us more dividends so we can generate more passive income. That's what it's really all about. And now let's scroll up, guys, and take a look at the balance sheet and see what is going on there. All right, guys, and for this, we are just going to take a look at the shares outstanding as well as the debt. And starting with the shares outstanding, much like with Citigroup, Allstate is doing a great job at buying back shares. So in the end of 2016, it looks like they had 366 million shares outstanding. Compared to the end of 2020, they had 304. So that's a difference of 62 million shares outstanding. And it looks like from the end of 2020 until now, they bought back another about 20 million shares. So this company is doing a great job of buying back shares. And I gotta say, the debt actually doesn't look to be in pretty bad shape as well. It is going up a little bit, guys. It's definitely creeping up there the last couple of years. And it looks like at the end of 2020, they had about $8.3 billion in debt, but has started to pay that down a little bit, guys. The last report looks like they've eliminated about $400 million in that debt right there. So they are bringing that back down, along with buying back shares, along with growing the dividend. So I would say those are three pretty good things to focus on for Allstate, or for any company for that matter. And now, guys, let's scroll up and take a look at the statement of cash flows real quick before we go on and talk about the dividends. All right, now scrolling down, we're gonna take a look at the levered free cash flow right here. So this has been kind of all over the place, like in the last 10 years or so. It looks like 2017 was a really good year. 2018 dropped down quite a bit. 2019 went up a little bit, 2020 down a little bit, and then in the trailing 12 months, it has basically doubled what it did in 2020. So it's going to be back up again. So right here actually is what we're looking at. Levered free cash flow is pretty much all over the place, but it is good to see it up in the trailing 12 months. The next thing I want to look at is the free cash flow per share. And contrary to what we saw with the levered free cash flow, this is going up as the years go on, okay? They are doing more free cash flow per share, which is good. This continued slope upward is probably due to them buying back shares. It definitely wouldn't look like this if they had more shares outstanding or were issuing more shares, actually, because like we saw, this is kind of all over the place. So them being able to buy back shares definitely helps us as shareholders as far as free cash flow per share goes, which is good because this is what they use to pay the dividends. And last thing I want to look at before we move on and talk about the dividends, I just want to compare the amount of levered free cash flow they have to how much they did pay out in dividends. So in the trailing 12 months, okay, they did 5.532 billion. And then scrolling up, guys, if we find the dividends paid, it's gonna be, where is it, guys? It's gonna be right here. So in the trailing 12 months, they only paid like $900 million in dividends. So that's like a drop in the bucket compared to how much levered free cash flow they have. So the dividend's in good shape. I'm not worried about the dividend, just based on how much levered free cash flow they have. No doubts they'll be able to cover this, continue covering it if they just keep putting up numbers like this. Even if they had another year like 2020, that's still more than enough free cash flow to cover the dividend. So that's really great to see. Now let's go on and talk about the dividend really quick, really briefly, okay? So scrolling down, Allstate has a forward dividend yield of 2.8%, which is a little bit lower than what we saw with Citigroup, but 2.8%, okay, it's not terrible. They do have a 5-year growth rate to make up for that. We'll get to that in a second. But first, I want to touch on the payout ratio of 24.19%. This is very low, very good to see, and is pretty much in line with what we saw comparing the dividends paid to the levered free cash flow a moment ago. Okay, it's like a drop in the bucket. It's not stressing them out too much at all. Moving on to the 5-year growth rate of 19.67%. Yes, that is awesome. I need more stocks like this in my portfolio. I need more dividend growth. I have some good high yielders. Okay, I have some good steady dividend kings, but I need some more growth. And Allstate is bringing that all day, which is great to see. And then they have a respectable dividend growth history of 11 consecutive years to go along with that. The last thing I want to look at as far as the dividend goes is the years of dividend payments, which they have 28 years of consecutive payments under their belt. It's definitely looking like Allstate pays a reliable dividend, and it looks like last time they had a cut was between 2008 and 2009, and you guys know what happened then. So not stressing about that. They have definitely brought it back and then some since then. And look at this jump between 2020 and 2021. Pretty unreal. All right, my friends, and that pretty much wraps it up for the two stocks I wanted to talk about today, Citigroup and Allstate, both of which I think are pretty good stocks to own in the financial sector, or at least are looking so from what I can tell. You may have some different opinions. You may feel the same way, but either way, let me know your thoughts on both of these companies in the comments below. I would be curious to hear what you guys think. And now with that out of the way, guys, let's jump over to the spreadsheet here and get into a little portfolio update. And before we do that, guys, before we dive in, I am proud to announce that the Dividend Portfolio Tracking Spreadsheet version 4.0 is now officially live and released. If you guys want to grab it and get all of this, the portfolio dashboard, which you guys have just been asking me for in like every video. If you want to get it, you can now do so. The link to grab it is in the description of this video. All you guys need to do is go click that link, and then it's going to open up like the templated version of this spreadsheet. This is important. Listen to this, guys, because this is the number one question I get. I get so many emails about this particular part. To start making changes and start inputting your own information, once you click the link and open the spreadsheet template, you need to go to File, and then you need to go, it'll pull up this drop-down menu here. Then you need to go to Make a Copy, which is right here. Click Make a Copy, and then it'll bring this up, and then you just hit OK. Okay, once you do that, it'll open up a brand new blank spreadsheet template for you, and then you can start inputting your own data. And then from there, guys, all you need to do, you see all of these yellow cells right here. The only place you put in data is in cells that are highlighted in yellow right here. It's basically going to be these two cells on the dashboard page. You go over to the portfolio summary page, it's going to be like the ticker symbol right here, as well as the column for the number of shares and the average cost per share. But then other than that, all of this other data right here should start auto-populating for you. Even the charts on the diversification page are going to start auto-populating for you. There might be a little bit of tweaking you have to do, but it's nothing too crazy. And if you have questions, you guys can always reach out to me. You know that. But the last update, I don't want to spend too much time on this. You guys have seen this before. The last update, in a major update really, in addition to the dashboard page, is this simple intrinsic value calculator right here. So you can input some information into this. It'll basically spit out a fair value for whatever stock you're looking up. So I was actually looking up DOW, Dow Inc., and going through some of the cash flows there and whatever. It should be fully functional. This is still like version 1 of the calculator. I'm sure I'll make some tweaks and make it prettier as time goes on. But I wanted to get that out there for you guys. And then there's also still the monthly data and the annual data pages that you can input information in. I personally use this every month, guys. I put in my portfolio stats from where it started to the market value at the end of the month to how much money I contributed to the dividend income, and it tells me all these cool stats. And this will be important to stay on top of, guys, because some of that data will populate these graphs right here, the value, the income, and then that other income one right there. So yeah, click the link to it in the description if you want to grab it. If you guys have any questions on anything, let me know. But like I said, the important thing is figuring out how to input your own data. But we went through that, and then from there, it's pretty simple. Just start putting data in those yellow cells and you'll be rocking and rolling, my friends. Now with all of that said, let's move on and get into the actual update. So as you guys can see right here, my portfolio is doing pretty good. It's actually sitting at an all-time high right now. Earlier today, it was in the $32,000 range, but it looks like I did take a little bit of an L today. Today is Friday the 17th. So throughout the day, I saw a little bit of a loss, like just over a 1% loss here, it looks like. But nonetheless, we are still up at an all-time high to finish out the week. And compared to last time we did an update video, compared to last week's video, the market value there was $31,478.36, which happens to be about $500 less than where we're at now. And then also, guys, the annual dividend income then was $1,518, which you can see on the screen, compared to what we are looking at here, which is about $10 more. So we are still creeping up in annual dividend income. The last thing I want to touch on is the total gain. So last week when we did the update video, as you guys can see, the total gain was sitting at 4.69% for a total gain of just over $1,400. And we are now at 5.47% with a total gain of $1,655. So we gained a couple $100 in unrealized gain and gained not a whole percent, but we are back in the 5% range, almost at 5.5%. And at one point throughout the week, guys, throughout this week, I do believe I was up over 6%. Well, yeah, I must have seen that because the day gain today was minus 1.07. So I was probably at a 6.5% gain at one point. So it's good to see it trending back in that direction, guys. And I can say this week there was a couple, I guess, cool things that happened. I had a couple stocks in my portfolio hit new 52-week highs, and those were Coca-Cola, Southern Company, and Procter & Gamble. And those are just a few that have contributed to this increase in unrealized gain in the last week. But it's good to see those three stocks performing well, unlike some others in my portfolio like AT&T and Verizon, which really have not done much for me. And actually, real quick on AT&T, I need to take that back because yesterday on Thursday the 16th, I think they were up almost 7% just in that day. That was a huge jump, and we haven't seen that from AT&T in a long time. Anyway, guys, enough rambling there. Let's jump over to the portfolio summary page here. I want to just share with you guys some of my purchases in the last week and also some stocks that I got some dividends from. So this week, guys, I picked up some Intel. I put $50 into Intel. I put $50 into Lockheed Martin, which I know is no surprise to you guys. I do that every single week, or have done so for the last couple of months. And then the third stock I picked up, I put $50 into Altria Group. Next week, I'll probably do the same exact thing, except I actually might pick up some more AT&T next week. I really like the idea of getting this holding to 100 shares. So maybe this coming week, guys, I'll put $50 into AT&T and maybe hopefully be able to get it to 90 shares or close to it. Definitely I'll be able to pick up over 2 shares of this company. So we'll see what happens there. And then I had a pretty good week of dividend income, guys. I got a dividend from 3M. I got a dividend from Main Street Capital Corporation. I got a dividend from Realty Income, and I also got a dividend from Coca-Cola, which is really cool, guys. I don't think I'm expecting any dividends this upcoming week, but I do believe overall by the end of the year, I should total over $1,000 in dividends, like for the entire year of 2021, which is a huge milestone. And with that said, that wraps it up for today's video. Covered a lot of good ground in this video. I was actually happy to talk about Citigroup and Allstate because, like I said, those are a couple stocks that I am considering adding to my portfolio. Anyway, guys, enough about me. If you guys wouldn't mind doing me just a quick favor, leave me a comment below and let me know, what do you guys plan on picking up this upcoming week? Which stocks do you plan to purchase? I'd be curious to hear what you guys have going on in your portfolios. So let me know in the comments below. And also, before you click on to the next video, if you have not done so already, please don't forget to hit the like button. Go and leave this video a big thumbs up. It would greatly help me get this video pushed out to other investors here on YouTube, and I would really appreciate the support. So if you wouldn't mind doing that one thing for me, that would be awesome. I would be forever indebted to you guys. And lastly, once again, if you want access to version 4.0 of the spreadsheet, the link is in the description, along with the link to join the Dividenders Discord group. There's over 270 different dividend investors in this community now, and it is starting to grow like a weed. And it's been really cool just chatting with all of you guys on dividend stocks and hearing about some of your stock picks and seeing your portfolios and hearing about some of your dividend investing journeys. It's been really cool, and it's a really supportive group. So if you guys want to join that, the link to that is in the description as well. And with that said, I will now get out of your guys' hair. But thank you once again so much for watching this video. I really appreciate it. Hope you guys have a great day, and I will see you in the next one.